Good morning, everybody. This is Dennis Wilborn from the Active Trend Traders, and joining me today, as we usually do on Friday, is David Grandy from All About Trends. Hey, David.
Good morning, Dennis.
Hey, I see that I was noticing that you went to see the San Jose Spartans play their first football game.
Yeah, I'm a graduate of there, and I usually go to most of their football games. We have a good time. We tailgate and just have a group of people and just, enjoy supporting my alma mater.
Hey, and I can remember growing up down in the Monterey Bay area, and San Jose State was always a great place for people to want to transfer to from the junior colleges, and uh, fantastic, university. So I guess is it called Cal State San Jose now, or is it, or
No, it's independent of the Cal State system, so it's just its own state university.
well, cool. I like independence in so many ways. So you ready to get going today?
I am ready.
And so I want to remind everybody that all the materials that we talk about are for training purposes only, and traders should always paper trade any new method prior to the risk of their own personal capital. And so, David, I love this time of year, fall. And you may ask why. Why? Is it because the market's going to be great through the rest of the year? No, that's not the reason. Because I'm going to Hawaii in October, which I am.
Excellent.
No, that's not the reason. I love fall. I love fall because of this. It's college football time.
There you go.
Hey, and that's my Texas Longhorns. I want to give everybody just a real quick look. Here's me in my office. I hope you can see me. I've got my Longhorn hat on and ready.
Very nice.
So yeah, I did my undergrad at University of Texas, and then my graduate work up at Cal. And I always kind of say, David, that at least I went to one university that knows how to play football. And so anyway, so getting going. So I want to remind everybody that Dave and I just absolutely love to talk about stocks. I know David answers emails of his members, and I answer emails and phone calls from my members, as David, does also. Just a chat about stocks and what's going on. So a reminder that if you have a group, we would love to plug in and present, how to make money trading stocks. And we can do an hour, we can do 2 hours, but if you have a group, whether it be local to the Bay Area or long distance, we can tap in via webinar also. Just let us know when and where, and we'd love to plug in. Right, Dave?
Absolutely. That's why we started these webinars, and that's why we're going to continue to do them. We want to help. We love making money in stocks and helping people do that, and the latter is equally important. So.
Yeah. So have you heard anything back from the money show people yet?
We are going to be speaking at the Money Show in Orlando in February, so we're looking forward to that. We got a lot of positive feedback from the presentation in San Francisco last week, and they asked us to come back, so we're honored to do that and looking forward to it.
Fantastic. And I'm going to try to be joining you for that, right?
Right.
Cool. So,
absolutely.
So we're going to be doing, and David and I are talking about just doing a national hit all the money shows. And so I look forward to getting to work with David on that. So stay tuned. We could be coming to a town near you. So let's get ready. Let's get going into the update. We don't have a lot of things to cover today because it's going into Labor Day weekend. This week, hey, markets hit record highs on the S&P, and now it's holding. S&P new record high. Now it appears to be either stalling or resting a little bit. Normal price action for a Friday afternoon. We are coming to you today at about 10:15 on Friday morning California time, so the market has not closed yet. And so a lot of our information will be approximations, and because the market has not closed. NASDAQ 100 popped up to a new 14-year high. It still hasn't taken out the ultimate high back in 2000. Now it also appears to be either stalling or resting. Russell popped up through resistance and is now, that resistance has turned into support and is now holding. So part of my aspects of outside influence and earning influence is earnings are basically just about done. They've got a few, couple of stocks on our watch list that are still going to be reporting coming up this week. As many people probably saw, David, you saw the big plunge on Q.
Yep.
They reported Monday before market open. So I hope everybody had proper protection in place for that one, or we're totally out of that trade. But typically September is a time for correction and posturing to go into hopefully the end of year rally, but we'll see what takes place. One of the things that we talked about a little bit last week was how to interpret this chart. This being the percentage of stocks on the NYSE over the 20-day moving average. We have had a phenomenal rebound. The only issue we have with the rebound off this low is that it's gone straight up off the bottom, David, and there has not been a lot of areas, if you were trading the index ETFs, have not been a lot of opportunities to jump long on those. We peaked on Wednesday of this week up in the 80 area, but remember from what we said last week, and if you don't remember, go back and watch last week's show, that the upper reversals don't necessarily tend to lead immediately to a large correction. However, these bounces off between the 20 and the 25% range tend to lead to very nice tradable rallies. Because I know you found that what we showed last week very interesting, right, Dave?
Absolutely. Yep.
Yeah, so let's take a look at, let's move over to the charts real quick. The S&P, these are live charts. Left chart is the daily chart, the right chart is the weekly. The S&P pushed through this resistance we had at 1991 this week and has found support there and on the 8-day moving average moving higher. Now it is extended significantly, and so we're getting these candles, dojis, hanging man up at the resistance, the new support / resistance area. And so with this type of candles that are basically kind of indecisive, along with some overextension here, a little bit of negative divergence in the stochastics. Here's where we don't want to read too much, David, into what's going on with momentum, because this has been a holiday week. And so as you see, the momentum has kind of been a flat line over the last few days on the S&P. As the institutional traders come back to work over the next week to 2 weeks, we should see whether or not they want to take profit off the table, profit that has been primarily due to non-institutional trader, in other words, guys like us. And so we want to be very careful going into this time of year. Again, this is the NASDAQ. Currently it is NASDAQ 100. Currently it is painting a hanging man, following all these other dojis. The 8-day is turning over a little bit, and so could we get a return back down to the 4,000 level? We certainly could. When? It's going to have to break through the 8, and so I'd be looking for a break of the 8 for a possible bounce back here. If it breaks this, and we're probably going down to either the 20 or even this upsloping 50. If you're a person's trading the 3-time leverage ETFs for either of these indexes, that would give you an opportunity to jump, opportunity for a short-term bearish trade. Let me get rid of this. There we go. Here's the Russell. Russell, same thing. This is the breakout that we had on Monday. Broke above these area, above the 1163 area, ran up to a level. You look over here. Look at that, runs right up to a level of resistance formed by these candles over here in this resistance zone, and is now pulled back over the last couple of days, but it's maintaining and respecting that 8-day moving average, David. And so as long as it respects that, the direction for the move will continue to be in this direction. If it fails here and fails where it did break out, then we'll probably look at all these levels of support we have coming down. So we're going to have to play it by ear. If the institutional guys come back to work and say, hey, it's time to take some profit off the table, if the situation internationally deteriorates with Russia and Ukraine, if the Germans keep putting out really bad reports on how their productivity has been, there is just so many things that could be hair triggers to the downside for the market. But as we see right now, as long as this trend stays in place, we'll be looking at trading off of this trend line to the upside. If it breaks the trend line, then we'll look at some setups to the downside. So that's what the market's telling us for this weekend, or this long Labor Day weekend, David. Are you ready to show us some charts?
I am. And let me just add to that. I mean, this has just been classic August holiday action where the markets are just kind of drifting higher on light volume.
Yep.
But for us, we just really pay more attention to the charts of leading stocks, and a lot of the stocks that we're seeing, we're not really seeing a lot of short sell setups. We're seeing stocks that are just simply extended and just in need of a pullback. So that's positive. That tells me that should the markets pull back after Labor Day here, that's what it's going to be, and it's just going to set up the pins for us a little bit versus it kind of being a hard, nasty sell-off that would trigger a bunch of short sells because there just aren't really a whole lot out there. So at least that's my take when I look at leading stocks. What do you think?
Yeah, I think that is very accurate. I think that what is taking place is that the leading stocks, I'll be talking a little bit about Tesla before we're done here today. I mean, the strong leading stocks just continue to move up, and we're waiting for those nice little pullbacks. The one thing that I have noticed, though, is that we may be moving into a time in the market where, like you said, it's going to be selective with regarding stocks, and it may be a time to start looking at, well, is there some stocks I can be short in and or doing puts, plus maintaining my bullish posture on these stronger stocks, because the stronger stocks are given one heck of a great ride.
Exactly. Yeah, and we always say it's a market of stocks and not a stock market, and so we just look for patterns, whether they're on the long side or the short side, and we know what we need to see, and we take them and we try to just focus on the charts of stocks versus trying to predict what the indexes are going to do, because we make money in stocks, not necessarily on the indexes. So.
That's absolutely right. And and David, I love that model you guys have, that you and Harlan have, is that you trade. You don't trade what you think, hear, or fear, but what the charts are telling you. I love that motto. It's awesome.
Okay, so just a little summary here. We're just pretty much biding time here as we've done the past couple weeks, because there just isn't a whole lot of setups right now we can work with. The markets are super short-term extended, as are leading stocks. Most of them are hitting resistance levels. So I'm expecting a pullback next week, and I'm also hoping for a pullback next week, because that would really set up some nice things. So I mean, the conditions are ripe for that, and it would be healthy to see that happen versus us continuing to blow higher here. So that's pretty much what we're waiting for. It's really all about getting to Tuesday and having the market, everybody come back and have the market, show us its hand a little bit more. So just a summary of our trading plan. We're mostly cash right now because we don't chase stocks. We don't chase stocks that are breaking out into new highs and pushing resistance levels. Instead, we let them come to us via orderly pullbacks, and we simply buy support and sell resistance, and we short resistance and cover at support. So we're just trading what we see, and that's it. So some months are really strong. We've got a lot of setups and a lot of trades trigger. Other months, like the latter part of this month, it's okay to be in cash. Cash is a position. We use it very heavily. We're rarely more than 50% invested because you don't need to be more than 50% invested to make significant progress in the market, and we're just looking for the best stocks with the best setups, stuff that we can see easily. If we have to spend more than 60 seconds trying to figure out the chart, we pass on it and look for the next stock. So so far, well, today's the last trading day in August, so $4,100 was the net result for us in August from the trades we featured and closed. So not a bad month, and most of that was closed, actually all of that was closed the first half of the month. So it was another really nice month for us. So as we look ahead to September, again, we're focused on really just the three things you need to know: up trends and how to trade them, down trends and how to trade them, and change in trend patterns and how to trade them. And I had a real hard time, honestly, finding a whole bunch of stocks to show you guys this week, because there's a lot of stuff that's just in no man's land. It just needs a pullback, needs some more time to set up. But we do have a few, or a couple, and they're on the uptrend area. So two patterns we use with uptrends. The first is what we call a pullback off highs, a stock that's in a confirmed uptrend above the 50-day moving average that's made a low volume orderly pullback to support. And this is VIPS. As you can see, it's in this confirmed uptrend above the 50-day, and it's had several pullbacks to support. Now, the last few times, it's never really made it to trend channel support, but this time it has, and it's testing that right now, and there's also support at the 50-day and lateral support. So we have three levels of support here. It's short-term oversold, so all the characteristics that we look for in a long size setup are here. It is a little bit accelerating its pullback here a little bit, so we'll want to see it stabilize here. And honestly, with the indexes being short-term overbought, we may just let this one be for a little bit. But this is a good example of what we're looking for in order to take a trade. And so where do we take the trade? We take the trade when it breaks above these pink lines to the upside. It's breaking through its mini downtrend and resuming a new mini uptrend, and that's where we take our trade, and our stop is a break above or below support. So pretty simple, just using the chart, doing what the chart tells us to do, and waiting for it to trigger the trade. The other upside pattern is trend channels. I just showed you that with VIPS. Same thing, stock in a confirmed uptrend, clear support and resistance. The bottom line on the trend channel is support, the upper line is resistance, and we're just looking for stocks making pullbacks. And this is a newer issue, but as you can see, it's got a nice little trend channel here above the 50-day, and it's made a nice little Elliott Wave ABC pullback now towards support at the trend channel support. Again, short-term oversold. So we're just waiting for this to complete the pullback here, hopefully in tandem with the index is pulling back a little bit, and then we'll take a look at taking the trade there. So that's really all I have to show. I mean, some weeks we have a lot of stuff happening. Other weeks we just have to wait and let the pins reset. What we're never going to do is just go out and trade for trading's sake, and trading because we have to make money every month and we have to meet some goal. All we do is we trade what we see, and some months are blowout months, some months are just kind of months, because we just have to take what the market gives us. And right now we just need to kind of wait and see what's going to happen post Labor Day, and let the markets and leading stocks relieve their overbought conditions right now and complete some patterns. And we've talked a lot in past webinars about making money in stocks is like going bowling, where you bowl for strikes and then you have to sit around and wait for the machine to set up the pins again. And that's kind of the place we're at right now. We're just waiting for the machine to set those pins back up so we can bowl again for profit. So next Friday, we're going to be resuming doing these webinars live, and I can't wait for that because I love talking about stocks. I know you do as well, Dennis. And
That's right.
I want people to bring their questions about investing and trading and about stocks, and we'll just go through stock after stock and give you our opinion based on what we see, not what we think, and we'll just pull up the chart of each one and tell you what it looks like. So I'm really looking forward to that. In the meantime, we do have a 15-day free trial, so you get everything our paying subscribers get. We send out a newsletter every Sunday, and then we also send out updates every trading day. We talk about what's happening in the indexes technically, as well as what's happening with leading stocks. We have a watch list of stocks that have set up nice patterns. We educate you on those patterns. We tell you what we need to see to take the trade. And when a stock on our watch list triggers a trade, we send you a trade trigger alert saying we're buying X many shares of X stock at X price. And we do the same when we're ready to lock in our gains or if we get stopped out. So we make it really easy for you to understand our system and trade in tandem with us and make money with us. So and the best way for you to get started is just to sign up for a 15-day free trial. There's no credit card or anything required. It's just, you know, an email address you want us to send it to, and you get to see everything our paying subscribers get for 15 days. And it's really a great way to find out more about us and see if that's going to work for you. So that's all, Dennis.
Well, David, before we got started, you said it wasn't going to today's wasn't going to be long. You were absolutely right, and as you said, hey, we wait, and I think that's one of the we don't talk about it very much, but I think that's one of the huge benefits of both of our services, is that neither one of us are chasing any stocks, and we may go days and sometimes weeks without, a few weeks without having a proper setup, and so what that does is it instills in our members, it instills and demonstrates how to have patience, and patience is not only a virtue, but it's also something that's really needed with regards when you are actually doing trades. A couple of stocks we're looking at, I think if you can. Let's see here. Let me take a look at that. There we go. That I'm looking at potentially could go either way, but Amazon with a potential to the downside. We'll see what takes place over here. I'm looking at the weekly chart over here. David, we're getting some just laggard type movement, and it may not be a huge move. Well, I was going to say a huge move. It may be just a few percentage, but if it rolls back down and comes down and retests in this area here, that's about $35 worth of movement. So a couple of stocks we're looking to the top, to the upside. We're looking at Baidu. It is not ready to be bought yet, but it is clearly put in a consolidation. And on a daily chart, the oscillators are down here in the oversold condition. But again, we'd like to see some after. This could go either way. If it breaks the 210 level, we're probably going to go down here and test at least halfway down, 205 to 200. And then a couple of, you were talking about the stocks. We're still in a couple of stocks. I'll just highlight to folks. With active trend trading, we got into this stock, which is the Skyworks Networks. We're still in this stock. We sold a portion of the position for the income generating portion up here at around 54.50, but we got in here at 52.85, and now it's continued its breakout on up. So we're sitting at about 56.63, and the other one that both of you, David, I know you guys and we have just had some, Tesla is the gift that seems to keep on giving. Yep. We jumped in this the day before earnings and down here in the 224 range, and it now is sitting at from 224 to 270. So that's one heck of a nice healthy return. And now we're basically just letting the profits run on this one. So with the active trend trading system, for any market conditions, we show our members and teach our members what to trade, when to enter, when to exit, what strategies to use, and what to expect. As Dave was saying, I know we were chatting before we started, David, and since the 1st of June, you guys have, it's interesting how we have both generated profits that total about $9,000 in closed trades.
Yeah, it's funny. It's almost to the penny. We're at 89.8850, and you're at 9081.15.
Yeah, amazing.
I mean, and it's different, and it's different stocks too. I mean, some of it's the same, but some of them are different. So it's really interesting how that worked out.
And so yeah, and I really love that, and it gives, and that's why oftentimes we do the combo subscription deal. We're really doubling up and giving folks ample opportunity to earn some dollars. Currently, we're sitting at, you said you're almost in cash. I am too, 26.3% invested at this point. And here's the two open positions we have. One, Tesla. Again, it's currently in this. When I put this in, it was sitting at 269. 56.30 on, and so those will be adjusted before we post to the website later today. And really pleased, the margin account's up 24.5%, and the IRA is up 40. One of the things people might have asked, why is the margin only up 24%? We started the timing premium service on June 1st. And I was using that margin count initially to do some testing early in the year on some modifications and refinements of systems. And so there's a couple of trades that I didn't want to take out of it by zeroing out the account. So I just left them in there. And when we began the timing service, the margin account was only up 11%. And so now it's up 24.5. We're definitely hitting the win ratio that we're looking at. And so here is what's offered. I'll leave this up just briefly on the premium and basic services for active trend trading. Regular $49.99 per month. And I was chatting with David. The value that both the All About Trends and active trend trading provide our members is pretty substantial. And I was sitting in the audience with Dave, or when Dave was making his presentation at the Money Show yesterday, and a gentleman who listened to David's presentation said, "Wow, you get all of that for that, you get all that value for that amount per month." And he says, "That is a deal." And so I don't know if I shared that with you or not, David, but
you did.
Yeah,
yep.
So pretty impressive. So here's some of the things we're working on. I had a great training session on Wednesday night. We talked about longer-term horizons. David, that training session went really well. I hope you had a chance to review it. But it's about helping people get into longer-term trades. And here's some of the other things we're looking at. And for this weekend only, and in honor of college football starting, we're going to have a Labor Day kickoff special for active trend trading, and it's going to be 40% off our premium memberships, which is normally $49.99. So for $29.99 per month, you can get locked into to active trend trading. You can find that. There will be a link on the banner at Market Tech Talk, or you can just go to the website at activetrendtrading.com. So David, great show today. I so enjoy getting to work with you. It will be nice when we can, add in the folks next week. That'll be exciting. I'm excited about that too. So
yeah, I can't wait.
Any big plans for the holiday weekend?
Not really. Not really. Just gonna watch some college football, I guess, and I can't wait for Labor Day to be over with. The market comes back, people come back to these webinars live, and everything gets to be more exciting. So I'm looking forward to it.
Okay. Yeah, me too. So anyway, for everybody out there, all members and non-members who just join, and just watch this show every week, have a great Labor Day weekend. And keep growing the egg, man. and trade wisely, trade profitably. With that, David, I'm signing off. Thank you very much, my friend.
All right, appreciate it. Thank you.